Have you ever heard these questions pop up in your head? I identified the right trend, so why did the trade go wrong? Or, I make a plan every time, but when I actually sit down to trade, I forget everything. If so, believe me, you're not alone. The truth is, beating the market isn't hard. The real battle is with our own minds. Chapter 1, Part 1. Trading isn't just a game of charts and data, it's a mind game. And until you win this mind game, no strategy, no tips, no indicator will work. The biggest strength of the world's most successful traders is their mindset. It's that way of thinking that keeps them steady through every up and down. Everyone wants to make money, but when it comes to trading, emotions like fear, greed, hesitation, and overconfidence can lead us astray. You've probably seen it many times. As soon as a trade starts losing, panic sets in. Then you either make quick, bad decisions or hold on to the trade for so long that you end up with a huge loss. And all this happens simply because our mindset isn't prepared for trading. We assume that if we take a course, watch some videos, or follow a guru's strategy, we'll make a profit. But the real truth is, until you train your thinking to align with trading, your growth will be temporary. Think about it. If trading were just about skills, everyone who knows technical analysis would be a millionaire. But that's not the case. The difference starts where the mindset begins. How you view losses, how you take risks, how you maintain self-control. All this determines whether you last in the long term. Every chapter in this book aims to mold you into the mindset of a professional, disciplined, and results-oriented trader. And this mindset can transform not just your trading, but your entire financial life. Chapter 1, Part 2. When you trade, every thought, every emotion, and every decision directly impacts your wallet. That's why trading isn't just called a skill, but a mental discipline. And this discipline won't come until you start to understand yourself. Most new traders make this mistake first. They try to control the market, but not their own minds. When the market moves against your expectations, you get upset. Fear sets in. You either close the trade immediately or make even worse decisions to try and recover your losses. This is where the cycle of emotional trading begins. Emotional trading is a trap that slowly swallows your trading freedom. And its biggest cause is expectations tied to outcomes. When you expect profit from every trade, you can't tolerate a loss. But when you view trading as a process NAD, you learn to accept both wins and losses equally. A successful trader knows that every trade isn't necessarily a winner. They know that nothing in the market is guaranteed. So they judge their decisions not just by the results, but by the thinking behind that decision. Imagine you took a trade according to your rules and it resulted in a loss. Does that mean your decision was wrong? Not necessarily. A trader with a great mindset thinks, did I follow my rules? Did I think logically? If yes, then it was a good trade, regardless of the outcome. This is the difference between an average trader and a professional trader. One chases profit every time, while the other strengthens their process because they know that's what brings long-term wins. Now the question is, how do you train your mindset? First, become an observer of yourself. Whenever you take a trade, observe your mental state during it. Are you trading because of fear? Are you rushing? Or is a past loss still bothering you? Second, at the end of each day, create a trading mindset journal. Write down what emotions you traded with, what you were thinking, what you felt, and how you reacted. This habit will help you understand the connection between your emotions and decisions. Third, understand that risk is a friend, not an enemy. Every trade has risk. But if that risk is controlled, planned, and based on your calculations, then fear decreases. And when fear decreases, your ability to think increases. Fourth, consider small losses as learning opportunities. Professional traders aren't afraid of losses. They learn from those losses what not to do next time. Their thinking isn't, I failed, but rather, I learned something. Finally, train your mindset daily, just like an athlete trains their body. Trading is also a performance game, and daily mindset training builds the foundation for your long journey. Chapter 2, Part 1. Have you ever asked yourself why, when everything seems right, the market trend, your charts, your indicators, you still make mistakes? The real reason isn't technical, it's mental. The true battle of trading isn't on the screen, it's in your mind. In trading, there's a moment called a microsecond decision. These are the few moments when you have to decide whether to enter, when to exit, and with how much conviction. Emotions, fear, greed, and overconfidence are hidden within these decisions. You've probably noticed that sometimes when you miss a trade, you feel regret. Then you take the next trade without thinking, just to make up for the previous mistake. This is called revenge trading, and it's a dangerous trap that quietly eats away at your capital. But professional traders don't get swept away by this emotional wave every time. They operate with a pre-established system. They have a process, and they trust it, even if it means short-term losses. Now think about it. Have you ever created a solid system for your trading? Have you only made technical rules, or have you also set mindset rules? Because the real difference starts there. Let's say you've made a rule for yourself. If a trade goes into a loss beyond your fixed risk, you'll close it immediately. But when that situation arises, you think, maybe the market will reverse now. Let's wait a little longer. This is the battle of emotion versus discipline. And when you lose the discipline, your account loses in the long term. Therefore, it's crucial to have it clear in your mind beforehand what your goal is. To be right or to be consistently profitable. Because there's a world of difference between the two. Being right means wanting to win every trade, while consistent profit means trusting your system in the long term, even if some trades go wrong. Remember, a good trade isn't just one that makes a profit. It's one that's based on the right thinking and rules. And when you train your mind to think according to the rules every time, that's when you gradually develop the habit of trading with discipline. This mindset takes you to a place where your confidence comes not from your balance, but from your thinking. And this is the first big step towards becoming a professional trader. Chapter 2, Part 2. Many people think that trading is just a skill learned by reading charts, recognizing candles, or using indicators. But the truth is, this skill is incomplete until a mindset is attached to it. That's why thousands of people start trading, but only a few actually stick with it. So, the question arises, how do you build a strong trader's mindset? The first and most important step is self-awareness, that is, understanding yourself. You need to know how your emotions react when money is on the line. Do you get anxious during a trade? Do you get angry as soon as you incur a loss? Do you quickly exit as soon as you see profit? All these reactions tell you how your mind thinks. And until you identify these patterns, you won't be able to improve them. Every decision in trading is a mental exercise, and every time you make a decision based on emotion without thinking, you deviate from your own system. Remember, the market doesn't care about your emotions, it moves at its own pace. Now, let me introduce you to another concept, risk desensitization. This means that by repeatedly trading with the right rules, you detach your mind from the fear of loss. In other words, you stop being afraid of losses because you know it's part of the rules, and in the long term, this is what will protect you. Along with this comes neutral thinking. This means you're neither overly excited nor overly disappointed. You view every trade as a data point, rather than attaching it to your identity or ego. This is where the mindset starts to become professional. Now let's talk about discipline. It's not something that happens suddenly. It's like a muscle that needs to be trained every day. Every day when you follow your rules, even if you don't feel like it, you're strengthening that muscle. That's why the biggest asset in trading isn't money or any strategy, but your self-control. When you understand this, the market doesn't feel like it's against you. You start to play it like a game, calmly, with a plan, and with a long-term perspective. So the next time you enter a trade, just ask yourself one question. Am I following my system or my emotions? Whatever the answer, it will determine the direction of your growth. Chapter 3, Part 1. Have you ever wondered why some people treat trading as a serious profession, while for others, it just becomes a gamble? The real difference lies in the process. A professional trader views everything through the lens of a process, and it's this process that leads to consistency. Now, let's talk about the mindset that helps adopt this process. First comes the pre-trade ritual part, which is your mental preparation before a trade. When you follow a routine before every trade, like market analysis, news updates, and technical confirmation, you put your brain in alert mode. This reduces the chances of making emotional decisions. Another crucial aspect is checklists. Pilots follow checklists every time they take off. Why? So that no small mistake proves fatal. Similarly, having a checklist in trading is essential. When you have predefined checkpoints for every entry and exit, you avoid random decisions. Then comes the trade review part. A smart trader stops after every trade, reflects, and then takes notes. They don't look at whether they made a profit or a loss. They look at whether they followed their process. This habit gradually turns them into a master. Now, let's talk about the false hope that often causes us losses. Many times we think, maybe this trade will reverse now. Let's wait a little longer. If I cut the loss now, I'll regret it. This thinking is the hallmark of an emotional person, not a trader. And in trading, emotions don't have much room. Following the process is the real strength. The aim of this chapter is to make you understand that a mindset isn't built by just thinking positively. It shows up in daily small decisions. When you treat every trade like a mission and connect every decision to a system, you're gradually preparing yourself to a level where profit comes naturally. And most importantly, never take this process personally. You're not a bad trade, you're just in the process of learning. Every trade is an opportunity, not an ego battle. Chapter 3, Part 2. The real game of trading begins when you commit yourself to a system. But the biggest challenge is consistently following that system, and this is where discipline comes in. Discipline doesn't just appear out of nowhere. It's built through small daily commitments, like checking the market first thing in the morning, updating your journal, or accepting a loss and moving on. Every time you stick to your plan, you're strengthening yourself. Now let's talk about distractions. This is that quiet enemy that eats away at your mindfulness. A notification, a call, or social media scrolling, just a second of diverted attention can cause you to make mistakes in trading decisions. And trading is a field where a small error can carry a big price. So the question is, how do you avoid these distractions? The first solution is to control your physical environment. When you create a silent, clean, and dedicated space for trading, your mind's focus automatically increases. The second solution is to block out time. When you promise yourself that you'll focus only on the market for the next hour, your mind works within that frame. And yes, a very big myth is that trading is fast money. In reality, trading is a game of slow learning and deep mindset. Those who see it as a shortcut only lose both their money and their confidence. On the other hand, those who respect this process become long-distance runners, learning a little bit every day. Here's another important point: how to avoid confirmation bias. We all tend to see what we want to see. If we believe the market will go up, we only notice charts, news, or data that support that idea. But a professional trader is someone who asks themselves, am I just seeing what I want to see? This very question helps them make a balanced decision. Remember, a strong trading mindset isn't just about information. It's the art of training yourself every day. And every time you identify your old patterns and choose a new, better response, you become not just a trader but a leader. Chapter 4, Part 1. Do you know what the most misunderstood, yet most impactful aspect of trading is? Self-talk, that is, what and how you talk to yourself. Because when you're in a trade and the market starts moving against your expectations, what you say to yourself determines whether you panic or think with a cool head. Now imagine if you tell yourself, I always mess up, your mind will literally start looking for results that confirm that. But if you say, I've learned before, I'll learn again, your mind will start looking for options. That's the difference between self-sabotage and self-growth. Trading has new challenges every day. Sometimes a loss, sometimes a missed opportunity, sometimes overconfidence. And in every situation, if your internal dialogue remains positive, practical, and calm, you'll do what's right in the long term. This is a skill, a habit, and it needs to be practiced daily. Now let's talk about overtrading. Many people trade repeatedly simply because they feel they are missing opportunities by not doing anything. But most of the time, this is an emotional reaction, not logic. And the real reason behind this overaction is an inner emptiness or restlessness that we're trying to fill by trading. But trading isn't therapy. It's a strategic skill that only works correctly when your mind is calm. You should ask yourself this question: am I taking this trade because my analysis says so, or just because I want to do something? This is an honest question, and its answer can make you a better trader. This is where emotional detachment also plays a role. Professional traders don't view a trade through the lens of winning or losing. They treat it as a data point, because the result of one trade doesn't determine your future, but your reaction to it certainly does. So the next time you're in front of the trading screen, talk to yourself, but wisely. Say, I don't know what the market will do now, but I trust my research and my rules. Believe me, this small dialogue can shift your entire mindset. Chapter 4, Part 2. The next big pillar of mindset in trading is expectation management. That is, what do you expect from the market? Look, whenever you put money into a trade, deep down, you have an expectation that it will work, make a profit, and quickly. But this is where most people get stuck, because the market doesn't care about your plan. A good trader knows that their job is simply to follow a disciplined process, not to try and control the outcome every time. And if you attach yourself to the result, you'll either get carried away by happiness or freeze in fear. In both situations, long-term growth becomes difficult. Here's a simple thought that can clear your mind. I don't need to beat the market. I just need to stick to my process. This very thought gives you emotional freedom in trading. Now let's talk about a very important point, the comparison trap, meaning comparing yourself to others. Today, when everyone on social media is showing off their success stories, big profits, luxury lifestyles, it feels stifling to think, why not me? But remember, you only see the highlights, not the backstory. Every trader's journey is different, and comparing yourself slows down your progress. So just ask yourself one question, am I a better trader than I was yesterday? If yes, then you're on the right track. Emotional consistency, that is, emotional stability, is what makes you better every day. And to achieve this, simple but powerful tools like mindfulness, breathing exercises, and journaling help. At the end of the day, just knowing that you followed your process is the real satisfaction. So the next time there's market volatility and restlessness arises within you, take a deep breath and remember, I can't control what the market will do, but I can control how I react. This very thought transforms an average trader into an extraordinary professional. Chapter 5, Part 1. Every trader eventually realizes that what's more important than charts, indicators, and news is the mindset through which we view them all. The real game is of the mind, and the biggest weapon is discipline. But here, discipline doesn't just mean following rules, it means controlling every desire that forces us to make emotional decisions. Imagine you've spotted a perfect trade setup. Everything looks right. The trend supports it, the volume is good, and the structure is clear. But as soon as you enter, the market moves slightly against you. Now two voices are active in your mind. One says wait, it'll come back, and the other says get out, the loss could increase. At that moment, discipline is what keeps you sticking to your predetermined strategy. Otherwise, fear and greed will combine to hijack your decisions. Discipline is the backbone of trading that limits losses and maximizes profits. But the question is, how do you build it? First, create your own trading rules. Make them clear, simple, and repeatable. For example, I'll only take 2 trades a day, I won't close a trade before the stop loss, or I'll check the risk-reward ratio before every trade. These rules should be like your trading constitution, never to be violated. Second, keep a record of every trade in a trading journal. Don't just write numbers. Include your emotions too. Write why you took the trade, when, how you felt, and what you learned. This habit will gradually sharpen your self-awareness. Third, establish a routine. To become a professional trader, you need to plan your day. When to check the market, when to take breaks, and when to learn, everything should be decided. There's no fixed time rule in trading, but having a structure keeps your mind calmer and more focused. And most importantly, discipline won't come until you stop seeing trading as a way to make quick money. When you view it as a profession, an art, and a long-term skill, that's when the honesty and resolve will come that you see in great traders. Chapter 5, Part 2. Many people believe that the most important thing in trading is knowing the right entry and exit points. But the truth is, if you don't have clarity in your mind, even the most perfect setup can turn into a loss. And that's why mental strength and emotional balance are considered the greatest strengths in trading. When it comes to emotions, greed, fear, excitement, and regret are the 4 biggest challenges for a trader. When we're making money, greed tells us to take even more risks. When we're losing, fear forces us to make quick, bad decisions. And when a trade is missed or a stop loss is hit, regret slowly eats away at our confidence. That's why understanding yourself is more important than recognizing a trend. A successful trader's true victory comes when they can read their own emotions and know how to manage them. The first step for this is slow trading. This doesn't mean you miss opportunities, but rather that you take every step thoughtfully, without rushing. The urge to rush often comes from FOMO, fear of missing out, which is trading's biggest enemy. The second step is learning to take breaks. Taking a break after every loss isn't weakness, it's wisdom. When your mind is calm, your decisions are sharper. Trading is a marathon, not a sprint. If you compete with yourself every day, you'll eventually exhaust yourself. The third step is meditation or mindfulness practice. It sounds unrelated to trading, but those who start their day by focusing on their breath for a few minutes have a stronger grip on their emotions. This not only increases discipline, but also sharpens your processing power. And remember, not every loss means you were wrong, and not every profit means you were right. Judge right and wrong not by numbers, but by your process. As long as the process is clear and strong, the results will gradually fall into line. The biggest victory in trading isn't on the chart, it's within your mind. Chapter 6, Part 1. Have you ever asked yourself why some people make millions in the same market while others just stare at charts? The reason isn't just skills or strategy, it's the professional approach. Most people see trading as a gamble where money is made by luck. But pro traders operate it like a business. And like any business, a system, structure, and discipline are essential. First comes the trading plan. This plan isn't limited to just looking at charts or identifying patterns. It defines when you'll trade, on what time frame, with what setup, what position size you'll maintain, what the stop loss will be, and what the profit booking criteria is. A professional trader repeats the same steps every time. They never trade based on feelings. Second, record keeping. Log every trade. What day you took it, why, what you were thinking, what happened, and what you learned. This data later becomes your biggest teacher. Those who keep a record of every action learn faster and repeat fewer mistakes. Third, fixed capital allocation. Pro traders never put all their money into one trade. They know that the market can turn at any time. That's why they never risk more than a defined percentage. This habit gradually strengthens your emotional stability. Along with this, learn to identify your break-even level. Many times, traders hold positions until they go into a loss. But professionals, when they see that a trade's energy is fading, don't hesitate to exit at break-even. They know that no loss is also a type of win. Every professional trader trains themselves in this process so that their decisions are based on rules, not emotions. This very thinking transforms trading from a gamble into a business. Chapter 6, Part 2. Now let's talk about the most overlooked aspect that stops an average trader from becoming a professional: post-analysis of trading. Yes, after taking a trade, most people forget what they did. But for professionals, every trade is study material. After a trade, they review it. Was the entry at the right place? Was the exit too early? Did emotions dominate the decision? Did the technical analysis give a hint beforehand that they ignored? They ask themselves all these questions so they can make better decisions next time. After this comes refinement from review. This means reviewing all your trading data every week or month. Which setups are giving the most profit? In which time slot was your performance strongest? Which trades proved to be your biggest mistakes? With all this information, you can continuously fine-tune your trading system. And when we talk about a professional approach, we can't ignore mental balance. A true professional trader knows that there are no guarantees in the market. Therefore, they neither get overly excited in wins nor break down in losses. They remain calm, think steadily, and treat every movement as normal. The biggest benefit of this professional mindset is that you never let fear or greed drive you. Your every trade planning, analysis, and action happens under a defined system. When you stop seeing trading as just a means to make money and start treating it as a professional career, that's when true success begins. Chapter 7, Part 1. Have you ever wondered why some people consistently win in trading while others give up after just one or two trades? The answer is the right balance of long-term vision and micro-focus in trading. Most new traders focus only on today's candle, today's pattern, and today's news. But those who stay in trading for years know that understanding the market requires months of mindset, not just a few moments of movement. A good trader knows that trading every day isn't necessary. Every day doesn't mean profit. The real game is to enter at the right opportunity and stay away from unnecessary moves. This mindset saves you from losses and helps you get into the habit of spending your energy in the right place. When we talk about long-term thinking, it doesn't mean you should quit trading and start investing. It means that every decision should be within a larger framework. It's important to consider which direction the decision you made today will take your trading growth in the next month. Now let's come to micro-focus. This means giving laser-like attention whenever you plan a trade. What will be the entry point in that one trade? What will be the stop loss? At what signal will you exit? And most importantly, how will emotions be controlled in that trade? When these two strengths, long-term thinking and micro-focus, work together, you don't just become a good trader. You become a strategic, stable, and wise professional. And that's what makes the real difference. Chapter 7, Part 2. You might have noticed that many traders, after a small loss, get angry and take the next trade with double the risk to cover the previous loss. And this is where a cycle begins that mentally exhausts them and their account too. This is why the real meaning of micro-focus isn't just looking at charts, but also reading your own mind. When you're in a trade, start asking yourself, am I taking this trade according to the plan or because of emotions? This is a simple question, but it shifts your mindset towards discipline. Every time we make a trade plan and then deviate from it, our mind learns that rules can be broken. But when you consistently follow the plan, a strength builds in your mindset that protects you even from big losses. The next step is reflection. After every trade, ask yourself these 3 things. Was this trade within the scope of my strategy? Did I control my emotions? If the same situation arises again, will I make the same decision? These 3 questions will improve your trading not just with numbers, but with introspection. When you adopt this kind of mindset, you break free from being a slave to the market and become the master of your decisions. And this is the level where true confidence is born, without overtrading, without fear, and without depending on anyone's opinion. Chapter 8, Part 1. Have you ever wondered why some people always pick the right trades, while others are always in doubt? The straightforward answer is their decision-making approach. To become a successful trader, the most important thing is clear thinking and the ability to make quick decisions. In trading, every moment is a crossroads: buy or sell, hold or exit. And if there's confusion in these decisions, the loss isn't just on the chart, it's on your confidence too. So, how do you sharpen decision-making? First, learn to trust your system. Many times, we spend time on technical analysis, but when it's time to act, fear or greed stops us. There's only one way to beat that fear: a pre-decided plan. Before every trade, create a clear script for yourself. If the price touches this level, I'll enter. If there's this much profit or loss, I'll exit. These types of decisions should be predetermined so that your mind doesn't ask questions in real time, it just takes action. The second important point is to avoid over-analysis. Sometimes we look at so many indicators and so much news that it becomes difficult to make a decision. Remember, there's power in simplicity. Stick to the strategy you've tested repeatedly. The third rule is to respect your decision after making it. If you've entered a trade according to your plan, don't close it prematurely out of fear. These are the small things that differentiate a professional from a novice. Chapter 8, Part 2. When it comes to taking risks, success becomes difficult without the right mindset. Maintaining a balance between risk and reward in trading is an art. Those who think that taking big risks is necessary to get big rewards should understand that smart risk-taking is the key to long-term success. Smart risk means not taking any big steps without a plan. It also means you should only risk a small portion of your trading capital at a time. When you keep your capital safe, you can trade with mental ease, and this directly impacts your decisions. Additionally, the most important thing in risk management is the correct use of a stop loss. If you haven't set a stop loss, you're putting yourself in unforeseen danger. A stop loss isn't just a technical tool, it should be part of your mindset, a commitment that you will avoid unplanned losses. This doesn't mean you're afraid of risk, it means you know how to control your risk. And when you manage risk correctly, you can easily find stability amidst market movements and make better decisions. Another important point: having the courage to accept the outcome after taking a risk, whatever it may be, is also a sign of your success. This mental toughness keeps you steady through the ups and downs of trading. Chapter 9, Part 1. If you think trading is just a game of technicals and reading charts, you're missing a big truth. Real trading is a test of your mental strength and control. Market ups and downs will come, but only those who stick around win. Your mind is your biggest weapon in trading. If you can't control it, all your hard work will be in vain. So the question is, how do you keep your mind focused and cool? The first way is to understand your emotions. Fear, greed, hope, these are all human emotions, and it's impossible to completely eliminate them in trading. But you must learn to manage them. Whenever a trade fails, instead of blaming yourself, calmly analyze where the mistake happened. This will help you make better decisions in the future. Second, continuously train yourself that it's not necessary to react to every market movement. Sometimes the biggest gains come when you know how to sit quietly. Stick with the trend and avoid unnecessary trades. Third, trust your strategy. Once you've created a system, test it repeatedly and improve it as needed. But stop changing your plan every time there's a small market news item. This will help you maintain your mental peace and stability. Chapter 9, Part 2. To succeed in trading, you need to develop patience and a continuous learning habit. The market is never static, and what works today might not work tomorrow. Therefore, it's crucial to keep yourself updated and be open to adopting new strategies. Patience means that you don't make hasty decisions. In the market, it often happens that you're losing, but then at the right time, things turn in your favor. If you panic and exit immediately, you deprive yourself of potential profits. Learning from your mistakes is equally important. Not every trade will be successful, and that's part of the process. But what's important is that you learn something from every loss. Make a note of it and plan a better strategy for next time. Keeping your trading journal updated is a great way to track your progress. In it, you write the reason for every trade, the outcome, and what you learn from it. This practice will increase your mental clarity and make your future strategies more precise. Ultimately, remember that trading is a game where the key to winning is your mental strength, patience, and willingness to learn. By adopting these, you'll be able to succeed in the market for a long time. Chapter 10, Part 1. The most important thing to remember in the world of trading is the development of your mindset. This is as crucial as it is difficult. But once you understand it, no market challenge seems too big for you. Continuously fill yourself with positive thoughts. When you are confident at every step of trading, you'll be able to make the right decisions. Confidence isn't just about trusting yourself, it's about trusting your system and strategy. Also, always remember that both wins and losses are normal in the market. See losses as learning opportunities and wins as the fruit of your hard work. When you trade with this mindset, mental pressure will decrease and you'll perform better. Another important point is to constantly motivate yourself. Trading on hope. Now, what exactly is trading on hope? It's that moment, or more often, a series of moments where you've entered a trade. Maybe it was a good idea, maybe not. But then, instead of following your plan, sticking to your stop loss or taking your profits, you just hope for the best. Let me paint a common picture. You enter a trade. Let's say you bought a stock. Initially, it moves a little in your favor and you think, great, this is going to the moon. But then, it starts to turn around. It dips a little. Your inner voice might say, oh, it's just a temporary pullback. It'll bounce right back up, and you hope it does. Then it dips more. It hits your mental stop loss level, or maybe even your actual stop loss, but you cancel it. No, you tell yourself, the market's wrong. This stock has to go up. I saw some good news last week, right? And you hope it reverses. Next thing you know, that small dip has turned into a significant loss. Your gut is churning. You're looking at your screen, willing the price to go back up, desperately hoping it will. You might even double down, thinking, it's so low now, it can't go any lower. This is where hope turns into a dangerous gamble, often escalating losses. Why is trading on hope so destructive? 1. It ignores your plan. Good trading is all about having a plan before you enter a trade. Your entry, your exit, both profit and loss, your risk management, it's all supposed to be laid out. Hope completely bypasses this. It's an emotional reaction, not a strategic one. 2. It leads to larger losses. That small acceptable loss that your stop loss was supposed to capture, when you remove it and hold on out of hope, that small loss can snowball into something much bigger. It can wipe out days, weeks, or even months of good trades. 3. It destroys discipline. Every time you trade on hope and deviate from your rules, you're essentially teaching your brain that rules are optional. This erodes your discipline, which is arguably the most crucial trait for long-term success in trading. 4. It creates emotional cycles. Trading on hope leads to a roller coaster of emotions. You'll feel anxiety, regret, frustration, and often a strong urge for revenge trading, trying to immediately make back your losses, which usually just digs you deeper. How do you combat trading on hope? 1. Have a concrete plan. Before you click buy or sell, know your entry, your exact profit target, and your exact stop loss. Write it down if you have to. 2. Stick to your stop loss like glue. This is non-negotiable. If your stop loss is hit, you exit. Period. No hoping for a bounce. It's protecting your capital. 3. Accept small losses. Understand that losses are part of trading. No one wins every time. A small loss is a cost of doing business. It's far better to take many small losses than one catastrophic one. 4. Review your trades objectively. After each trade, especially losing ones, review why you entered, what happened, and if you stuck to your plan. Identify if hope played a role and learn from it. 5. Focus on the process, not the outcome. Your job as a trader is to execute your well-thought-out plan. The outcome of any single trade is irrelevant to your process. Focus on doing the right thing, and profits will follow over time. So the next time you feel that little voice whispering, just hold on a little longer, it'll come back. Recognize it for what it is, hope. And in trading, hope without a plan is a dangerous strategy. Trade with conviction, trade with a plan, and trade with discipline. That's all for today. Happy trading, and remember to trade smart.